Hi, I'm Andy Temte, and welcome to the Saturday Morning Muse. Start your weekend with musings that are designed to support your journey of personal and professional continuous improvement and to improve financial literacy around the world. Today is April the 19th, 2025. So far this month, we've defined what risk is, we've introduced the concept of risk tolerance, or alternatively risk aversion, and we've illustrated the link between self-confidence, self-esteem, and risk tolerance. Today, we're going to discuss other factors that influence your tolerance for taking calculated and informed risks. As a reminder, we are not talking about risk seeking or purposefully seeking out risk for the sake of experiencing the thrill of risk. That's an entirely different subject. Now, before we dive into the list of factors that affect risk tolerance, I want to be clear that we'll be talking about both your ability and your willingness to take on risk. Your willingness to take risk is related to your feelings, your expectations, and your behaviors. Your ability to take risk is much more mechanical and is related to things like income levels and your net worth. I'll be using these words fairly carefully as we proceed. Another important concept to introduce is ceteris paribus, which is Latin for all else the same or holding all else constant. This phrase is going to come in handy in our financial literacy lessons because the global macroeconomy, investing, and personal consumption are wildly complicated processes with many points of interconnectivity. Rarely does one variable rise, causing another to fall in a one-to-one relationship with no other impacts from other variables. Therefore, to keep things simple as we illustrate various financial and economic concepts, we will deploy ceteris paribus as a teaching tool. And yes, I know it sounds very academic. The important point to remember is that nothing is as simple as it seems. And as your level of financial literacy grows, so too will your ability to think critically and consider the impact of multiple variables all at once. So, let's get back to the main storyline. Other than my personal self-confidence and self-esteem, what are some of the additional factors that impact our relationship with risk? The first is time horizon. Time horizon can also be thought of as the expected holding period of an asset or an investment, and the length of time you expect to hold an asset impacts the level of risk you're willing and able to take. Holding all else constant, there it is, ceteris paribus, the longer the expected holding period, the more risk an investor should be willing and able to take. Why? Because a longer holding period or time horizon will allow you to ride out or hold on to the asset during short-term downturns in the market without having to sell it and experiencing a loss. Note that I'm using the phrase all else constant or all else the same when talking about this relationship between time horizon and risk tolerance. For example, if during the holding period the long-term expectations for the rate of return or gain for the asset changes, then our willingness to hold on to this asset might change. In this case, all else wasn't the same. Return expectations changed, leading us to reconsider our willingness to continue to hold the asset. The second factor is age. Your age and time horizon are interrelated factors that affect risk tolerance, but they are not the same thing. Again, all else the same, the younger you are, the more risk you're willing and able to take. However, A young person can have a short investment time horizon to support a major purchase like a house or a business, and as a result may be willing or able to take less risk with their money to avoid a catastrophic short-term loss that would disrupt their plans. Keeping things simple for now, when we're young and have a long time horizon, your investment portfolio will tilt toward more risky assets like stocks. As you age, time horizon shrinks and your willingness and ability to accept short-term losses decreases significantly. Said differently, you'll need to access your money sooner rather than later, so stability is preferred over the prospect of higher returns. The third factor is income or earning capacity. As we discussed time horizon and age in the 2 points above, note that I was using willingness and ability most of the time. In these next 2 points, we'll be focusing more on your ability to take risk. Your ability to recover from short-term losses with future gains impacts risk tolerance. Again, all else the same, if your earning capacity or your income is higher, you will be willing to take more risk because you can earn more money in the future to recover from short-term losses today. For example, suppose we have two individuals who are identical in every respect other than one person earns $100,000 per year and the other individual earns a cool $1 million per year. These two individuals are thinking about investing in the same risky stock. Again, all else the same, the lower earner will have less tolerance for accepting the risk of investing in this stock relative to the higher earner who has a much greater ability to recover from likely short-term downturns with their higher future income. The next factor is existing portfolio size. This factor is related to the income or earning capacity of the individual and is primarily related to the individual's ability to take risks. An individual with a large portfolio is able to hold a wider array or variety of asset types, meaning that they can hold a more widely diversified portfolio. Now, we haven't introduced the concept of diversification yet, but for now, what's important is that diversification helps mute the volatility of individual stocks or specific asset classes. However, we need to be really careful here with our generalizations. I personally know people with large portfolios who are very risk averse, and I know people with small portfolios who are very risk tolerant. So existing portfolio size matters, but let's not take that too far. Next are your financial goals. Your financial goals directly impact the time horizon or holding period of your investments. So while it isn't necessarily a separate factor that impacts risk tolerance, it is a critical determinant of time horizon, and we need to highlight it separately. Financial goals can be things like saving for college, a home purchase, retirement, and or the purchase of a business, just to name a few. Second to last in our list is knowledge and skill. The more experience you have with economics, money, and investing, the more comfortable you'll be analyzing the risk and return profile of an investment. This improvement in knowledge and skill will yield better economic decisions, which will lead to improved performance, which will help build more confidence in your ability to reap the rewards that riskier investments can offer. Finally, today we have stress tolerance. Although we've already discussed self-confidence and self-esteem, our ability to process stress can have a tremendous impact on our willingness to take risks. The general rule is this: if holding an investment is keeping you up at night, it is likely not the right investment for you. Like most things in life, this is a balancing act. There is no growth without discomfort. So if you have high stress levels, meaning low stress tolerance, and lose sleep over risky investments, then a less risky, lower expected return portfolio is likely the better option for you. In investing, as in most things, to know thyself and invest accordingly is extremely important. Your peace of mind matters. So that's where we're going to leave it for today. We'll see you next week for more financial literacy lessons. I wish you grace, dignity, and compassion. My name is Andy Temte. This is the Saturday Morning Muse. You can find the show on all the major streaming services as well as out on YouTube. Please like, subscribe, rate, and most importantly, share this really important lesson with your friends, your colleagues, your neighbor, and maybe even a family member or two. The show is produced by Nicholas Temte, and we'll see you next time on the Saturday Morning Muse.